Three pretty big events that have occurred. If we start off with global trade, momentum on global trade has been pretty decent. Definitely US and China continue on their talks, and momentum looks in the right direction with that mini deal of buying more agriculture products, which should be positive. But on top of that, more recent news that maybe we won't see automotive tariffs coming on as well, which is good for Europe. So overall momentum on global trade seems to be going well, and that's lifted up markets. International news, we definitely have seen some momentum coming through on Brexit, but we've seen a deferral of the Brexit situation until the end of January and an election coming up in the not too distant future. So markets are taking that in stride. It at least is not negative from an overall perspective. And then third, on the interest rate front, we did see Bank of Canada hold firm on interest rates, but did give a more cautionary tone on the economy, which does leave the room open for a further rate cut down the road. And on the US side, we did see the rate cut as market was anticipating, but the Fed did give a bit more, positive outlook going forward, and that might mean that we may not see another rate cut in 2019. Markets actually took that in stride, which I think was a little bit better than what we would have expected. Well, unlike a US election where you really have two different groups and parties that are quite extreme, and that would move markets differently, from a Canadian perspective, though, there's a lot of news coverage on the election. From a market perspective, it didn't really make a difference who won between, the Liberals or the Conservatives. Markets didn't really react to that. They don't see either party really boosting Canada's economy, and therefore really was a no news event. We'll obviously continue to watch global trade, though it looks very optimistic right now. At any moment in time, Trump could come out with a speech or a tweet that could definitely send markets in a different direction, and we've seen that happen numerous times over. Secondly, we want to watch Brexit, what happens with the elections, see which side is winning, because that could also have an impact on where Brexit finally ends up. And then third, as we're tying to Trump, what is going on with the impeachment proceedings, and where does that end up, and how does the market react to that? It could all be a situation where the markets don't really care too much, but it definitely will be noise coming into the markets, and we do want to pay attention to see who are the winners and losers as a result of that scenario. So we still have a slightly bearish tone to the markets. We do think that eventually we're going to see a pullback in markets as markets get a little bit disappointed with longer term data. That being said, the more recent data has been a little bit more optimism, in there. We see global trade being a little bit more positive, and even some of the economic data looks to be pretty good. So we've actually taken up some of our equity weights, but we're still underweight overall markets. And if we continue to look forward on that, that movement is probably going to be more of a short-term play than a longer-term situation. So by the end of the year, we'll still be slightly underweight equities, but less so than we were called in the last month ago.